Hi, I am Soumya Jain and welcome to Weekly Economic Insights, where we discuss the latest news and updates that affect your personal finances. In today's segment, we'll begin with an expert's view on the government's new pension scheme. The government has approved a new pension scheme starting from April 1st, 2025. Under this scheme, government employees will receive a pension after retirement, amounting to half of their average monthly salary from their last working year. The scheme guarantees a minimum pension of Rs 10,000 per month for those who have worked for at least 10 years. If the pensioner passes away, their family will receive 60% of the pension amount. It's expected to cost around Rs 6,250 crore each year, with an additional Rs 800 crore for back payments in the first year. Let's hear what our expert Viral Bhatt, founder of Money Mantra, has to say.
Yes, so there might be a potential economic impacts of increase in UPS contributions. So the increased government contributions to the unified pension schemes will likely have several economic impacts on the government finances. First impact, I think it will be an increased fiscal deficit and in that direct expenditure. So the most immediate impact is a direct increase in the government expenditure. As the government contributes a higher percentage of the salary to the person's pension schemes, it will need to allocate more fund from its budget. Then long-term liability. While the immediate increase might be manageable, the long-term liability of providing pensions to the large number of government employees can be significant, especially if the scheme is not well funded or managed. Third thing, I think, in my view, is the impact on the public debt also, because it will increase the borrowing. If the government cannot generate sufficient revenue to cover increased pension cost, it may need to borrow more money, which could lead to an increase in a public debt. Then another small impact will be on the administrative cost, and the good part of this particular UPS will be the reforms, these potential reforms. So long-term sustainability will create in the system when government start giving the pensions to the public. And definitely, considering that this particular UPS on the individual's overall personal finances is also, it will have some impacts. First impact, I think, reduced take-home pay. Its immediate impact will be people will understand that, people will come to know that they will have a fixed kind of a pensions, and it will give a kind of a peace of mind to the employees having the social securities in place for them. Then the last and important thing, it is, as far as negative is concerned, it will reduce the flexibility. People will not go to the other different avenues where the returns gaining the returns, more higher returns on the different kind of investment options. So yes, this kind of impact will be on the new unified pension scheme.
Thank you for sharing your thoughts. Now let's look at some new regulations in the mutual fund industry. The Association of Mutual Funds in India has introduced stringent guidelines to prevent market abuse, including front-running and fraudulent transactions in mutual funds. These measures will be implemented in phases starting November 2024. They will monitor for suspicious activity weekly. Fund managers must use fingerprints to enter offices and take at least 10 days off each year. Mutual fund companies now have to cut ties with any stockbrokers found involved in unfair practices. This means if a broker is caught breaking rules or cheating, mutual funds can't work with them anymore. This rule aims to protect investors and keep the mutual fund industry honest. The changes follow some major fraud cases in the recent years. The new rules also include monitoring communications, keeping detailed records, and regular reporting to authorities. The industry hopes to attract more investors and grow sustainably by closing loopholes and increasing transparency. Moving on to a new initiative by the Reserve Bank of India. The Reserve Bank of India is launching a new unified lending interface system to make loan processes faster. This system will securely share financial information with banks, speeding up loan approvals, especially for small businesses and farmers. RBI governor says ULI will transform lending like UPI revolutionized payment. The system combines data from various sources like government records and credit bureaus using standardized APIs for easy integration. The goal is to reduce paperwork and speed up credit decisions, helping meet different sectors' credit needs. ULI is part of India's growing digital infrastructure, which includes other initiatives like JAM, Jan Dhan Aadhaar Mobile, to improve access to financial services. Now let's focus on some updates for gold bond investors. The RBI is offering an early cash out option for sovereign gold bonds issued between May 2017 and March 2020. Depending on their bond series, investor can redeem these bonds from October 11, 2024 to March 1, 2025. Bonds held for over 12 months will be taxed at 12.5% without indexation benefits. Experts say these bonds are safer and more tax efficient than physical gold, offering 2.5% annual interest. However, physical gold is more liquid and can be used as jewelry. The early redemption option gives investors flexibility if they need funds sooner. The government sees this as a strategic move to manage future obligation and exploit current market conditions. Investors should note the specific redemption windows for their bond series. Moving on to the issues banks faced. From September 1st, some important messages from banks and online shops may not be reaching you due to new telecom rules. Messages containing web or app links might not be delivered if sender hasn't registered with phone companies. This affects OTPs and transaction alerts. Banks and businesses were required to register their message templates by August 31st. While the rule aims to reduce spam, it might also block crucial messages. Major telecom companies like Jio, Airtel, and Vodafone Idea requested more time to prepare. If you haven't received expected messages since September 1st, these changes are likely the cause. The new system requires telecom operators to check the content of messages, not just sender IDs. Users should be aware of potential disruption in online transaction and account updates. Let us look at the large number of unclaimed deposits. Public sector banks have transferred about Rs 35,000 crore of unclaimed deposits to the RBI. This money from over 10 crore accounts hasn't been touched for over 10 years. State Bank of India leads with Rs 8,086 crore, followed by Punjab National Bank of Rs 5,340 crores and Canara Bank of Rs 4,558 crores. Banks are trying to find account owners or their families, including publishing list of inactive accounts on their websites. If you think you might have a forgotten account, it's worth checking. The government is encouraging banks to be more proactive in locating account holders. This initiative could help reunite people with forgotten money. Banks are also improving their processes for handling accounts of deceased customers more sensitively and efficiently. Finally, let's quickly look at RBI and NPCI's new announcement. Interoperable Cash Deposit or UPI ICD now lets you deposit cash at ATMs using UPI apps without needing a debit card. This service is available at ATMs that both accepts and dispense cash. You can even deposit money into someone else's account. The RBI and NPCI announced this on August 29th, and banks will gradually introduce the service. These ATMs are becoming mini banks, offering services like account opening, credit card application, and fixed deposit creation. This is part of RBI's plan to expand digital banking. The feature uses your UPI-linked mobile number and virtual payment address. It follows last year's introduction of cardless cash withdrawal via UPI, further integrating India's popular digital payment system with traditional banking services. That's a wrap for this week's Economic Insight. We've explored major shifts across various sectors, reminding us just how dynamic the financial landscape can be. Stay informed to navigate these changes and make informed decisions about your financial future.